Hello, my name is Vanessa Moraes. Today I'll be presenting a comparative analysis of the provisions, contingent assets, contingent liabilities of two selected companies by me for this particular assessment. So I've selected Commonwealth Bank of Australia and Telstra for this particular analysis of financial statement. Let's move ahead to the introduction session. So this report is basically recognizing and seeing how contingent assets, contingent liabilities, and provisions are recorded by Commonwealth Bank of Australia and Telstra in accordance with the Australian accounting standards, standard 137. This presentation basically helps in understanding how financial transparency and risk management in large Australian organization works. Also, I'll be highlighting the importance and the implication of these standards in their financial reporting. Let's move ahead to the next slide. So understanding the key terms. So provisions are the liabilities of uncertain timing or amount. They are recognized when there is a present obligation and a probable outflow, and the amount can be reliably estimated. So provision is the money set aside to cover a future liability or obligation by a particular company, and it is recorded on the balance sheet when a company has present obligation due to the past events that has happened, and the amount can be reasonably estimated. So this refers to compensating customers for example, this refers to compensating customers who were harmed by the bank's past misconduct. For example, this can be charging unfair fees or providing poor financial advice or failing to deliver the promised services. Example for this provisions, that is one of the examples mentioned in the example, or we can call it one of the scenario which has happened as per the annual report, is the Commonwealth Bank of Australia has recorded $173 million for customer remediation, and this is a present obligation due to the past misconduct where the costs can be estimated. Next is the contingent liabilities. Contingent liabilities are potential or existing obligations that depend on the uncertain future events. They are disclosed but not recognized unless the outflow becomes probable and measurable. So, as per the annual report, Telstra has disclosed potential legal claims of 2.5 billion in performance guarantees for subscribers and infrastructure contracts. These are not recognized, but because the liability isn't probable yet, but they are disclosed to perform the stakeholder guarantees. Next is the contingent assets. Contingent assets are possible inflows of economic benefits that are only recognized when virtually certain, otherwise only disclosed if probable. Let's move ahead to, so here's an overview of the Commonwealth Bank of Australia. So it is one of the largest financial services firm, and it offers diverse banking, wealth management, and insurance solutions to over 17 million clients, and it had a net profit after tax of 9,481 million, and it also records an capital ratio of 12.3%. The bank mainly focuses on digital innovation, customer-centric services, and also the environmental, social, and governance leadership, which it owns, with $70 billion sustainability funding target for climate transition. The bank also operates in a span retail banking and business banking and also institutional banking. Moving ahead to the next company, which is Telstra. Telstra is Australia's largest and leading telecommunication businesses. It serves 99.7% of the population with mobile and fixed line and internet services. It is one of the most used telecommunication network. Telstra recorded $23.5 billion in total income and also $1.8 billion profit after tax. Telstra is known for technological developments like 5G. It also invested heavily in digital infrastructure, cybersecurity, and also believes in AI-powered customer solutions. They also have an sustainability initiative like the renewable energy solutions. Moving to the next slide. So here's talking about the sustainability contributions by Combank and Telstra. So the Commonwealth Bank integrates environmental, social, and governance factors into strategic decisions and committing 70 billion to climate transition by 2030, and out of which it has already committed 54.2 billion by the year 2024. So the bank's social responsibility also engages stakeholders for alignment and adheres, commits to its global framework, providing assured sustainability data. On the other hand, Telstra's environmental goal aims to reduce Scope 1 plus 2 emissions by 70% and Scope 3 emissions by 50% by the year 2030. And also it aims to achieve 100% renewable energy consumption by the year 2025. Telstra fosters digital inclusion and aiming to build digital skills in 500,000 Australians by the year 2025. It is also assisting 1.4 million customers. It has assisted 1.4 billion customers by financial year 2024. Moving to the next slide. So here's talking about identifying the provisions and the contingent liabilities and assets and Combank and Telstra. First is the provisions of Commonwealth Bank. So the bank sets aside $1.1 billion for leave entitlement. Second is the customer remediation, which is $173 million for programs as of June 2024. Reconstructing, which holds $150 billion for divestment related costs. Next is the legal and compliance provisions made for litigation, investigation, and review. Lastly, it talks about aligned advice remediation, which is indemnities for past misconduct remediation to diverse state subsidiaries. Talking about the Telstra's provisions, Telstra holds $1.8 billion for leave entitlements like pension. Reconstructing, which holds 349 million in current provisions, including 199 million for redundancies. Legal provisions, 200 million for disputes and litigation. The other provisions made by Telstra are for $545 million total, which includes resolved tax provisions from previous years. Contingent liabilities at Commonwealth Bank, which is the shareholder class actions appeal filed against the federal court judgment, which was dismissed last year in May 2024. Next is the ASB Bank proceedings. This is the ongoing class action happening, which took place in New Zealand. And the financial crime compliance, this is about the potential regulatory penalties. Lastly, it talks about regulatory penalties, which is the ongoing investigations for potential law breaches, example the Austrac. So the contingent liabilities section of Telstra talks about some legal disputes, that is the potential liabilities from ongoing litigation, also the regulatory penalties risk from non-compliance with telecommunication law, which it had faced, which will be going under the contingent liabilities. Also the NBN agreements, which will be considered under guarantees and indemnities. The performance guarantees, which holds a total of 2.5 billion for subscribers and infrastructure agreement. So the contingent assets, neither the Commonwealth Bank nor Telstra discloses any contingent assets in its financial statement. The next slide talks about the similarities in the provisions and contingent liabilities for both the companies. So both the companies have employee benefit provisions of their own particular shares, which is 1.1 billion for Commonwealth Bank, and Telstra has 1.8 billion recognized significant provisions for employee entitlement, like the annual or the long service leave. Next is the legal and compliance provision. CBA has a provision for litigation and compliance, while Telstra sets aside 200 billion for disputes. Next is the reconstructing costs. Both the entities account for reconstructing provisions, including strategic workflows or operational adjustments. Regulatory risk exposure. So the Commonwealth Bank identifies risk from financial crime and banking regulation. On the other hand, Telstra recognize risk exposure from telecommunication regulatory framework. Both the companies are involved in ongoing legal challenges, and which also acknowledging the unquantified or lawsuit risk. Neither of the company have disclosed contingent assets in its financial statement. Next, I'll be talking about the differences in the provision and contingent assets and contingent liabilities. So the Commonwealth Bank mainly focuses on customer remediation, which is around $173 million, driven by banking misconduct. And next is the smaller reconstructing provision, 150 million, often tied to uh, divestments. The contingent liabilities also include the financial crime penalties. Talking about Telstra, it has larger reconstructing provision, which is amounting to around $349 million in total, mostly due to redundancies. So next is the legal provisions, which is around $200 million provision for litigation. Although there is no detailed breakdown on the indemnities. Next is the contingent liabilities, which is the general litigation risk, which is not detailed. And lastly, it talks about the performance guarantees, which is the significant amount of 2.5 billion for subscriber infrastructure agreement across the parent guarantees. So this slide talks about adoption of the Australian accounting standard, that 137. So let's see how Commonwealth Bank and Telstra have made sure that they align with this particular standard. So firstly, talking about the provisions, both Commonwealth Bank and Telstra recognize their provision for employee benefits and reconstructing. The Commonwealth Bank also includes customer remediations, while Telstra accounts for making good and warranty provisions. All of this are based on the best estimate of expenditure. Next is the contingent liabilities. Both companies disclose contingent liabilities like legal claims and guarantees, but they directly do not recognize them as liabilities due to uncertainty, which is completely adhering to the accounting standard 137, which is disclosure only rule unless the possibility of outflow is remote. Lastly, the contingent assets. So neither of the companies, that is Commonwealth Bank or Telstra, recognizes contingent assets, such as possible recoveries from insurance or even the regulatory disputes, unless they are realized, unless the realization is virtually certain. They disclose them when the inflow is probable, maintaining a conservative approach. Moving on to the next slide. So here's talking about the importance and challenges faced by most of the companies while reporting this particular provisions and contingent assets, contingent liabilities in the financial statement. Some of the importance are enhancing financial statement credibility by accounting for future commitments, setting aside funds for any of the future arising commitments, and also providing a risk disclosure and boosting investor confidence. Next is highlighting potential gains for preventing overestimation. So some of the challenges which are faced by this company is estimation of uncertainty requirement, significant management judgment, and risk in misstatements. Not making significant management judgment of what may arise, and then failing to make a difference between provisions and contingent liability. Next is balancing transparency and providing a fair view to avoid any alarming shareholder or misleading reporting. Next is allowing that is following strict regulatory and compliance standards, um, that is the accounting standard 137, to avoid any penalties. So this presentation can be concluded by mentioning that the companies have been consistent in application of the Austrian accounting standard 137, which is basically essential for credible financial reporting. Also, the Commonwealth Bank focuses on regulatory and customer obligations, while Telstra emphasizing reconstructing and workforce management. The industry-specific risks shape how this provision and contingent assets and liabilities are reported. Also, it has make sure that the accurate estimation and disclosures build trust and meet the regulatory expectation. Both the company compliance with the Austrian Accounting Standard 137, which supports transparency, stakeholder confidence, and informed decision making. And lastly, reliable reporting also promotes sustainability and accountability in Australia's cooperative landscape. Next slide is basically mentioning all the list of references that I have used in preparing the assignment report, and which also relates to this particular presentation. That's all. Thank you for your time and attention.